Okay, so we are going to understand the golden rules of accounting. Okay, so these rules of accounting will be applicable throughout the accounting as a subject. Okay, so first of all, however, after writing it will be easy to understand. And there is also one more thing, that there is no a very substantial logic behind that why these are rules framed like this and why not just like. Okay, so do not have such confusion. Okay, just take a note of that, and when you will practice more you will get hand of it. Okay, so increase in expenses and assets, we will give a debit to them. In case of decrease in expenses and assets, we will give a credit to them. So these are simple rules, like whenever there will be increase in expense, like whenever the business entity will you know incur such expenses or purchases some assets, then those accounts will be debited and there will be credit for corresponding reduction in expenses and assets account. So rule 2, so there are five types of accounts mainly. First one is assets, then second is expenses. So increase in liability, okay, capital and revenue, there is a corresponding credit. Okay, whereas in case of reduction in liability, capital and revenue accounts, there is a corresponding debit. Okay, so the first rule of second, so the second rule states that increase in liability, capital and revenue account will have a credit entry first and corresponding entry to debit. However, these we will understand later. Okay, so let's take an example to understand the situation. Let's just suppose there is Mr. A, okay, who is a owner of what? Owner of business of furniture. Okay, now what happens? There is a second also person. Okay, there is a second person, Mr. B. So what happened? So Mr. B frequently purchases furniture products from Mr. A, like chairs, tables, okay, all sort of products. And Mr. B said, okay, I will pay you advance money. Okay, I will pay you advance money in this financial year, and you can deliver the goods like chairs and tables in next financial year. So advance money has been received in financial year 1. Okay, but delivery will happen in financial year 2. Okay, now what happens when this, so there are two separate transactions. First one is receipt of advance money, and second one is delivery will happen. So in financial year 1, when this advance money has been received, we will not recognize the value of goods and services as income in books of accounts of A. Okay, but when delivery will happen in next financial year, that amount which has been recorded in financial year 1, there will be an adjustment entry to record the income in financial year 2. Okay, so to convert the amount that has been recorded in financial year 1 into income of financial year 2, there will be adjustment entry. Okay, so in that case, so the adjustment entry will include, or we can say it will state, a debit to liability account. How? Let's understand. Okay, so let's understand it first, that if Mr. A has received advance money from Mr. B, so there increases the liability of Mr. A towards Mr. B of what? Of delivery of chairs and tables to Mr. B. Okay, so there increase a liability, and what we have said, if there is an increase in liability, we will give a credit to them. Okay, now in case of adjusting entry, when we will convert the advance money into income of financial year 2, because whenever the delivery will be made, the the revenue or the advance money that has been received in financial year 1, okay, will be recognized as income in second financial year based on the delivery made by Mr. A to Mr. B. Okay, now in that case, if there is adjustment entry, so there will be a corresponding debit to the same account which had the credit in first instance. Okay, so that how we do in accounting. Like, let's say suppose advance advance payment. Okay, so we have, so let's say, so we have received advance payment. Okay, now whenever we will receive advance payment before delivery of goods and services, it will create a liability of what? Of delivery of goods and services to customer. But when in next financial year, suppose let's say this is a matter of financial year 1 and we have come to financial year 2. Now when we will deliver the goods and services, so for increase in liability there will be a credit. Okay, okay, now in case of delivery there will be reduction in liability. Why? Because what we have as a liability, it's delivery of goods and services to customer Mr. B. Now we will give a corresponding debit to them, debit to the same account, advance and payment account. First of all, it will get credit, then it will get debit with the same amount. Okay, so that matches with, okay, so the whole process is matches with choice D for the current question, that is the income that has been collected. Okay, so the income has been collected in advance in financial year 1, however it will be recognized in financial year 2, okay, based upon the delivery of goods and services to Mr. B. Okay, that's all for our solution. However, we have derived choice D is correct. Okay, thank you.